Good afternoon, everyone. I'm Abraham Tachjian. I'm a director in the payments practice at PwC Canada. I'm also a lawyer. I'd like to first start by thanking Edgar, Fernando, and the entire crew at Cellcom for giving me this opportunity to speak today. I've promised them to stay professional and avoid bad dad jokes, but I may slip a few in there because it's the afternoon and you're just coming back from lunch. I'm thrilled to be in Mexico City, where the energy is palpable and infectious. It's my first time here, and I'm really thankful for the opportunity to speak to you about open banking. It's a professional passion of mine because I've dedicated such a big portion of my career to it. It's also a personal interest because I'm very cheap, and I like getting the best deals, especially from my banks. Now, I've had an unpredictable career, starting as a lawyer at the height of the financial crisis in 2008, to somehow ending up in Southeast Asia, where I started a brand new digital bank in Hong Kong from the ground up. But without a doubt, the honor and privilege of my career came in 2022, when the Canadian government named me the open banking lead for the country. I was tasked with the difficult and some may say unenviable task of working with banks, fintechs, credit unions, and government agencies to reach a consensus on the fundamental issues around open banking. Now, I did that through a series of workshops, which culminated in a framework I designed that I handed off to government. Thankfully, that framework is now being implemented via legislation. We're not there yet, but we're right at the cusp. We could see it coming. My objective today is to highlight the path Canada has taken towards open banking, not only to show you the long road and the amount of effort that we've put into it, but to emphasize the importance of regulation, namely of the role of government in aligning all of the puzzle pieces needed to have a modern financial sector. And to do so, I'll outline the key steps in the journey, focusing on 4 significant dates. These milestones were not only impactful individually, but also revealed important insights on how government involvement and industry collaboration contribute to the development of an open banking system. But before I get us started on this long bus ride of a journey, I'd like to start by sharing a few words on the backdrop in which open banking has developed in Canada. While it's captured most of the attention over the years that it's been under development, it hasn't been the only instrumental piece of financial policy in the works. Rather, it's part of a larger agenda of policies. In fact, while stakeholders have complained about how slow the progress has been, like my 2 daughters complain about bedtime, the government has in parallel been working on a variety of new reforms which will inevitably impact open banking, as you see here. So starting at the top there's the Retail Payment Activities Act, or as the cool kids call it, the RPAA. This legislation moves Canada to a system where the payment activity, rather than the entity, is regulated. It imposes risk management and fund segregation requirements on fintechs, on any company that has anything to do with the movement of money. They also have to register with the central bank, who maintains oversight over these companies. The effect of the RPAA is to improve the risk posture of these fintechs who for years have kind of played in a regulatory gray zone that incumbents haven't been too happy about. In addition to the RPA, we have privacy legislation amendments. In fact, Canada's regime was so dated that the government considered completely overhauling it. Now, up until that progress came to a screeching halt because of political issues, it provided for, among other things, the ability for a consumer to share its data. You see, it enshrined a legislative right in favor of a consumer, putting an end to the discussion about who owns the data, the consumer. In fact, open banking in Canada is not exclusively enabled by open banking legislation. Rather, privacy laws dictate what you can do with your data as a consumer. Open banking legislation just says how the industry does it for you. So in addition to that, we also have changes to how organizations access payment infrastructure. Historically, only large banks had access to Canada's payment rails. This stemmed from their membership in the organization that maintains infrastructure. But we've recently overhauled that too, with a law that expands membership into Payments Canada to fintechs that meet the requirements of the RPAA we just talked about. So when a fintech improves its risk posture, it can be rewarded with a seat at the table with all the other incumbents. So I hope you're starting to see the little interconnection between all these policies, because I'm going to keep painting this picture in the backdrop of open banking. And I consider this: access to consumer data, complemented with improved risk management, opening the door to membership to Payments Canada. And now suddenly fintechs and payment providers are on a much better footing to really compete with incumbents for the attention of the clients that they share with new innovative products. But the problem is, there's only so much you can do with data. And the value of membership into expensive clubs is questionable if you can't make business deals there, right? Now, if only these companies could actually do something with the information that they access from customers. Well, lucky them. Payments Canada has actually been working on updating our payments infrastructure to make it more real-time, implementing a real-time settlement functionality. Think along the lines of what you have here in Mexico with SPAY. Yes, I know we don't have it, but we're working on it, trust me. Now, admittedly, I'm simplifying the nature and the impact of these projects. Most of them have also suffered more twists and turns than a telenovela, and their introduction may not happen in a timely sequence. Nevertheless, when you combine these together, juxtaposing their impacts, we notice two takeaways that I'd like to focus your attention to. The first being that Canada's at an inflection point, in the sense that I can't recall another time when there was so much financial policy being developed. Now, it's true that legislation typically trails innovation, fair enough, but there's something to be said about the amount of innovation that's coming down the pipes in Canada. In addition, the changes highlight the importance of looking at open banking, not as a goal in itself individually, but rather a cog in a system of an advanced and robust financial policy ecosystem. On its own, a data-driven system is anticlimactic. The potential is limited to the data that's accessed. But data can only feed a limited amount of applications, right? It's when data is combined with actionable capabilities, say payment initiation, the movement of money, that the system really starts to shine. Now, this functionality and all this can't be enabled by industry, as the objectives that it's targeting exceed its corporate purpose. In addition, as the Canadian experience shows, it's also typically intertwined with a series of other policies that go far beyond data sharing. Rather, the financial well-being of consumers is the responsibility of government. And though it could be supported by industry, and it must, government needs to take the lead. So with this context out of the way, let's start with the Canadian open banking timeline journey. This is my most depressing slide. I apologize, it gets better from here. So after many years of research and studying and discussions, 8 to be exact, Canada's closer than ever to the finish line with last year's announcement of the Consumer-Driven Banking Act, our legislation. And though we've had financial data sharing in the market for a few years now, they've been limited by unreliable screen scraping practices that really are not safe, as well as bilateral arrangements that don't benefit a wider economy, but rather a closed loop of stakeholders and consumers. Now, this is where a legislative regime shines, by outlining the rules of the data sharing ecosystem, namely with the rights and obligations of all participants, in order to expand the benefits to everyone, and not just consumers that have the good fortune of having relationships with parties who have entered into data sharing agreements. So without further ado, let's start with the first significant date. I feel at this point it would be appropriate to have the Star Wars opening crawl playing in the background of my presentation with the usual script floating at the top. A long time ago, in a galaxy far, far away, dun, 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 dun. And that's how it feels like when you trace back the history of the concept in Canada, all the way back to August 2017, actually. This is the first key date in the open banking journey. It was when our Department of Finance released a consultation paper regarding the review of the federal financial sector. And in this consultation, Finance stated its intent to examine the merits of open banking to give Canadians greater control and access over their banking data. He also talked about the need to protect their security and privacy. Now, this was a pivotal moment in the Canadian open banking journey. It was the first hint of the policy objectives that would eventually drive much of the development of our system. But more importantly, the data is critical because it's what sets the Canadian system apart from others. You see, we often look at what others have done as a model for what Canada should do, precedent as to what we should follow, as Don was mentioning earlier. Don't recreate this whole system. And as open banking lead for the government, I was a big proponent of this approach. I was a fan of the virtues of learning from others to avoid their pitfalls. In fact, my motto in life is, if plagiarism is good for technology companies, it's good enough for Abraham Tachjian. So I've used that as my driving factor. But in learning and bringing stuff over, we can't simply copy-paste because the driving factors, the policy objectives, differed by jurisdiction. While Canada spoke about giving customers control over their data and protecting them, other countries, their policies were a little different. Take both the UK and Australia, leading jurisdictions in open banking. It's fair to assume that the context in which they developed shaped their final design. Let's start with the UK, for example. The introduction of open banking ran in parallel to an investigation by the Competition Markets Authority. And the regulator's final report found that 9 of the largest banks had an adverse effect on competition, what they called later the CMA9. Their words, not mine. Now, among the remedies proposed to address this situation was imposing open banking on these institutions, requiring them to share data, allowing them to initiate payment, and get them to fund the implementation entity. Australia was quite similar. In the lead-up to the introduction of the consumer data right, their version of open banking, there was no less than 4 government investigations into the financial system between 2014 and 2017. Now, while the scope of each one of them differed, the conclusions were significant. They were relatively similar in the sense that major banks had a significant market power. And in addition, as the Australian government is working on the draft of their legislation, a royal commission into misconduct in banking was also underway. Not a great time for banks there. Neither of these foreign experiences were relevant in Canada. The conversation around open banking did not stem from the need to implement corrective measures. Rather, as the first mention of open banking by the government suggests, the focus is not on market behavior, but rather consumer empowerment, an acknowledgement of a consumer's right to have complete control over their data, and importantly, direct its flow to anyone of their choosing for their benefit. Of course, the outcome of implementing an open banking sharing data rule will forcibly create competitive dynamics that will benefit, consumers. But the genesis of the conversation, the start of it differs across geographies. Now, as systems evolve and decisions are made on the evolution, it's helpful to look back at the roots of the system to really understand the foundation of how it was built. What were we trying to accomplish in those early days? What were the guiding principles? The second critical date in Canada's open banking journey was August 4th, 2021, 2 days before my birthday, no coincidence. This was the day the Advisory Committee on Open Banking released its report. For background, this committee was composed of an expert panel appointed by the government to kind of advise them on open banking. And in its final report, it proposed recommendations around key elements of what Canada's open banking system should look like. The report was impactful for 7 reasons. On who should be admitted into the system, it recommended that all banks be forced to participate, be required, and this in order to ensure that as many Canadians as possible benefited from open banking. Now, off the bat, this committee may have acknowledged that the participation of these big banks would be critical to creating a network effects in a data ecosystem, meaning the value of open banking would only increase if more people used it, that the ecosystem would only go as far as the amount of data that could be exchanged. Mandating the participation of the biggest banks would go a long way in that direction. Next, on that very point of data, the committee proposed an iterative approach. Unlike the UK model, which prescribed both data sharing and payment initiation, this committee preferred a phased approach. Let's start with just data only, right? What's typically referred to as read access. And once we get the hang of this, let's look at payment initiations. Let's figure out the bugs in the system before we move on to expanding into payments. But one of the report's most considerable elements was regarding governance. Who's going to watch the system? Here, the committee suggested the establishment of a new entity, a brand new one from the ground up, a fit-for-purpose organization, as they put it, to provide ongoing administration of this system. The point was made in the background of the committee acknowledging a lack of consensus among stakeholders on who should govern the system. Surprise, surprise. But more importantly, the committee may have recognized that open banking is a novel concept in the regulatory space, and then overseeing the system would involve a highly technical effort. And what's more, perhaps in recognition of this technical skill set, to ensuring the entity's success, it also recommended active industry participation with broad representation ranging from banks to consumer agencies. And in this model that you could call a hybrid open banking system, the government would set the mandate and objectives of the entity, but would delegate decision-making and administration to members of the organization. Industry involvement has been and is a hallmark of the development of Canada's open banking system. Tracing its roots to this committee report, it was further strengthened by recommendations that came afterwards by the government, when it recommended the appointment of an open banking lead to guide the development of the system, for which I'm eternally grateful. It added that the lead's work should be supported through industry working groups with representation similar to the governance entity. Now, this was later implemented during my term as open banking lead, where I created 4 working groups to tackle these topics, to look at these fundamental issues impacting open banking, namely accreditation. What are the requirements that tech companies or fintechs would have to fulfill to enter the system? Privacy requirements, security requirements, and everybody's favorite topic, liability. As in, who's on the hook when something inevitably goes wrong? It will go wrong, but who's going to pay for it? That's the question. Recall that from its beginning, our system did not seek to correct market behavior. As such, it was only logical that industry be involved in its development. Now, the third critical date in Canada's open banking journey was just last year, April of 2024. This was the date that the government tabled its annual budget, which included, finally, the open banking framework. By this time, we changed the name from open banking to consumer-driven banking, which maybe aligns better with the objectives of what we were trying to reach. Besides, from a marketing perspective, it kind of makes people uncomfortable when you use open and banking together, right? Not very comfortable, so maybe a good idea from a marketing perspective. But this terminology aside, much had led to the announcement. So my term as open banking lead had ended in December 2023, capturing the inputs of all the engagements I had with the industry, be it with individual discussions with stakeholders, these working group meetings, as well as my counterparts from other countries, one of which you had on stage here last year. Now, those were distilled into my framework of an open banking system, which I handed to the government. Now, there was much to unpack from the announcement. With the budget, the government revealed one of the most anticipated decisions since the inception of the system, naming the regulator that would be in charge of this. It eventually went to an entity we call the FCAC, which is a consumer protection agency. Remember the policy objectives. The committee had recommended, however, years ago, that decision-making and administration of the system be delegated to the industry, with government setting the mandate and the objectives, but the budget announcement deferred. It tasked this regulator in charge of consumer protection with oversight of the system. The reasons behind active government involvement and oversight of our system are numerous. In Canada, we have this unique distinction of being one of the rare countries where oversight of financial institutions is distributed between the federal level and the provincial level, depending on the organization type. This distribution of powers was one of the key drivers for maintaining oversight with the government, the alternative being a potential fragmented system. Now, with regards to system participation, the government followed on the recommendations of the advisory committee by announcing that it would mandate participation of Canada's largest bank. And also, for the first time, it referenced government entities as banks as potential beneficiaries. Think about export development banks, perhaps as an indirect acknowledgement of the benefits of open banking for the government itself, beyond just consumers. This isn't uncommon. In fact, in the UK, the government relies on open banking to collect taxes rather fast and efficiently. And another critical element of this budget relates to liability. And perhaps in a push to really inspire confidence in the system or encourage consumers to make the most of its potential, the announcement also spared consumers from any liability for using the system. Think about that. A consumer wouldn't have to assume any financial loss because they shared information in the context of this open banking framework, this regulated framework. Now, the final important date in Canada's open banking journey was the most recent one. In June of last year, this consumer-driven banking legislation was introduced and finally passed. It still hasn't come into force. It was nevertheless a watershed moment in the development of our banking system. It was the first piece of legislation that related to open banking, encompassing years of analysis and industry consultation. And in addition, as you can see here, it was the first legislative definition of a data sharing framework, namely a framework within which consumers, including small businesses, can direct that their data be shared among participating entities of their choice, and to ensure that the sharing of the data among participant entities is safe and secure. This was part of a twofold approach, which would later be followed by a second round of legislation. This first piece focused on defining the scope of the system, meaning the type of data that can be shared, and our system is much aligned with an open finance one than a banking one, excluding certain type of data that's been enriched, the powers of the person in charge to overseeing the system, and the creation of a public registry that the government maintained, among other things. What's more, it acknowledged the role of the industry in an open banking system, what we've been talking about all day, by allowing for a standards body to be responsible for the establishment of technical standards for communicating between stakeholders. Now that does it for my timeline. In parting, I would like to leave you with this. If the Canadian experience is any indication, developing an open banking framework is complicated. But that's the point. It shouldn't be easy. Whenever you combine the objectives of consumer well-being and control over data with the development of a data sharing framework, you're bound to run into challenges. Don't kid yourself. Designing an ecosystem is difficult. Addressing competing concerns from organizations which may have more to lose than others, with the need to bolster competition, innovation, will undoubtedly lead to decisions that may be unpopular. It's precisely why these competing interests can't be left solely to industry alone. It's got to be a combination. It's not the business of consumer protection or well-being. That's why we have legislation. It's also, organizations are not in the business of dictating the terms on which they share data with those who they please. That's a whole other competition issue right there. Rather, it's the goal of the government which must address the key elements of open banking that you see here. These tenets are necessary for a system to thrive, namely oversight, consumer protection, security, competition, innovation. While the industry can get involved, don't get me wrong, that's certain steps to enable these, as my friends Don and Eyal can attest to, and with pride actually, based on their long-standing work at FDX, the industry can't be the only one that's leading this, because it can't fulfill the requirements of what you see on the screen here for a balanced approach to open banking. I underscore that. So I'll leave you with that. Once again, I'm Abraham Tachjian. Thank you very much for giving me this opportunity and paying attention after lunch. I'll see you around.